Good afternoon. This is Larry Tentarelli with your Daily 5 for StockCharts.com. And today we're going to take a look at 5 charts in 5 different sectors that are very high on my screen and that I wanted to share with you today. So we'll get started with a brief introduction. My name is Larry Tentarelli. I'm a full-time trader. I'm the editor and publisher of the Blue Chip Daily Trend Report. You can find me on Twitter at LMT978. Also, my website, it's bluechipdaily.com, and you can see some of the chart work and technical trend analysis that I do there. So we're going to get started with 5 charts on my screen. And as I said, we're going to talk about 5 different sectors today. And what I'm seeing overall, and I spoke about this the last time that I was here with the video, is overall the trend both in the S&P 500 and the NASDAQ 100 is improving. S&P has been up 8 of the last 10 days and showing some nice improvement. So we'll get started with a few different charts. We're going to start in the healthcare sector, and we're going to start with AmerisourceBergen in the medical supplies industry, $32 billion market cap. And as you can see on this screen, and there's quite a few charts in this group, Bristol Myers is similar. But as you can see, ABC has been in a very nice uptrend really since the Fed shifted gears. So the Fed shifted gears at the end of November. They announced that they were going to move into a tightening bias. And you can see ever since the Fed announced that tightening bias, AmerisourceBergen has been pretty much straight up in a very strong uptrend. We know the markets have been volatile in 2022. NASDAQ rolled over, S&P rolled over, but Amerisource has held this rising 50-day moving average the entire time in all of 22, which to me shows a lot of relative strength on this chart versus the market. And I think part of what it is, there's a lot of concern in the markets right now, obviously about the geopolitical situation overseas, inflation, bond yields, the Fed, but healthcare tends to be a defensive sector with growth-like characteristics. And Amerisource is a very, very strong uptrend. And over this 50-day moving average, I would continue to give that uptrend the benefit of the doubt to the long side. So we're going to move into the financial sector, and insurance has been very strong. The last time I was here, I shared the Berkshire Hathaway chart, and while the banks overall have not participated in this breakout in bond yields, so bond yields have broken out to multi-year highs, but the banks have been choppy. Bank of America, JP Morgan, they've been weaker, but the insurance industry has been very strong. So if we take a look, we're going to use the time frame of, once again, the end of November, when the Federal Reserve shifted, the FOMC shifted to their tightening bias. And we can see that AIG has been a top performer since then. It's trading over 4 rising moving averages. It recently tested a new high just this morning, bullish 20, 50-day cross to the upside. So what I see here in AIG is a nice longer-term uptrend trying to break out of this base. Now, markets are volatile, and obviously any market can pull back or the charts can consolidate at any time. But for my time frame, this is a very, very solid chart, just breaking out to a new high. If there was any normal consolidation or pullback here or in the markets, I'd want to see it hold up over $60. But for my time frame, that's a very strong uptrend in a very strong industry that's breaking out to new highs. Chart number 3, we're going to move into the communication services sector with Google. And people often think that Google is in the technology sector. Technically, they're in communication services with the internet content. But a few things that are working on the Google chart. Now, Google is a recovery idea chart. And just like the NASDAQ 100, Google did roll over into more of a downtrend. below the 200-day moving average. But overall, technology has been improving nicely. As I look on the screen right now, it looks like the NASDAQ's up about 1% on the day. But a few things on the Google chart. So it put in a new high, and then as the markets started to weaken, Google did as well. But if we take a look at the 2,500 level, that's held 3 times. So 24.90, it held on a closing basis at 25, held on a closing basis here, and it held on a closing basis here. So 2,500 has established itself as pretty good longer-term support for Google. And now what we have in this recovery attempt is over 4 moving averages. The 200-day moving average is still trending higher. The 50-day, which had rolled over in the beginning of January, the 50-day is starting to flatten out. The 20 days turned higher. It's pending a cross. It hasn't put in a bullish cross yet. But all of this is longer-term trend improvement for me. Now, the question often comes up, how do I differentiate what some people call a bear market rally versus the start of a new recovery move? And often in real time, it's hard to peg that. But what I'm looking at here is when Google started to roll over, it made a series of lower highs. So lower high, lower high, lower high, lower high. It failed versus this declining 50-day moving average. And basically every rally was sold at the 20-day. It had a gap here after earnings, but then it faded again. But now what I'm seeing is it's starting to put in some higher highs. So it closed yesterday at about a 30-day high, 40-day high on the charts. And overall, what I want to do with Google and the NASDAQ 100 is I'm going to continue to give this recovery move the benefit of the doubt to the upside as long as Google holds over 2650 on any type of a pullback. We'll go to chart 4. So we're going to move into the technology sector, and NVIDIA it's a true market leader. So they are the largest market cap stock in the semiconductor industry, over $700 billion. But a couple key trend improvement signals here, and I've got a position in NVIDIA. So we're going to take a look, and this is going to be the opposite now of what we saw with some of the early charts. So at the end of November, the Federal Reserve moved into their tightening bias, and then we can see NVIDIA pretty much went straight down. So we looked at the healthcare chart and we looked at the insurance chart, and we saw that when the Fed tightened or announced their intentions, those charts went straight up. Tech and NVIDIA went straight down. Now, a couple things that are very important here from a longer term perspective. So 200 to 210 is a key longer term level that held. So it tested 1, 2, 3, 4 times. It tested lower, but it held that 200 to 210 level. And that's a support level that really goes back to last year. So we've established where the key longer term support is. Now what's happened is in this recovery move, the 50-day rolled over, and NVIDIA spent almost all of 22 below the 50-day until recently. So it had a nice recovery move over the 50-day. About 2 weeks ago, it put in a big breakout bar, consolidated, put in another big breakout bar, and is consolidating again. So what we've got now is NVIDIA went from a stage 4 downtrend into a stage 1 potential recovery base. And now it's starting to break out over the top of 270 and over that base. So very, very constructive chart. NVIDIA is, it's a market leader. It's a benchmark for the semiconductor industry. And also we've got a bullish 20-50-day cross to the upside. The 50-day has flattened out back over all 4 moving averages. Now, as I said, the markets can pull back or consolidate at any time because it's been a pretty strong recovery move. But on any pullback here, just by looking at this chart, really over 240 to 250, any pullback over that range, I'd give the benefit of the doubt to the recovery move. But I think that NVIDIA is set up fine right where it is for longer term, and I've got a position there. And then we'll move into the final chart, and we'll go into the energy sector. And I'm going to bring up the ETF chart because in the energy sector, off the top of my head, there's really about 10 or 15 charts that are really set up very well. So Devon Energy, Chevron, Halliburton, ConocoPhillips, EOG. There's just quite a few large cap energy charts that are trending higher, but the overall sector continues to lead for the year. So we can see 2022, when the market started to roll over, and energy's been very strong the entire time. So energy broke out over the 50-day. Looks like the first day of the year, January 2nd, I believe it was, and it's held that uptrend over the 50-day the entire time. Now, the energy sector can be very volatile because obviously it's tied to some degree to crude oil prices, but we can see very, very strong uptrend testing the 20-day here, but over 3, almost over 4 rising moving averages. And just by looking at the chart on any major pullback, $65. So we can see it here and we can see it here. $65 would be a key level that I'd want to see hold on any pullbacks. And then in the shorter term, I'd want to see it stay over the 50-day moving average. But for the most part, energy's been a strong sector that's been leading year to date. And so far, it's been buyable on the pullbacks. So that's it for today's video. I appreciate everyone's time, and I hope that you enjoyed the video. Thank you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.